Hi guys, it's Ken from Smart Forex Education. Today we're going to go over how to make money using Fibonacci retracements. Now, Fibonacci retracements were derived from a talented mathematician from Italy called Leonardo Pisano of the Middle Ages. And what he did, he actually identified levels where prices of percentages which are related to natural life proportions. So basically from your ankle to your knee to your hip to your shoulder, there's a specific percentage. This was then later transferred in the financial markets, and we're using these same levels to identify support and resistance areas in price. So what we're going to do now, we have the euro dollar chart. I am going to pull up my Fibonacci retracement level. Now what you need to do first and foremost is first look at what the overall direction of the market is. So number one, look at what the overall direction of the market. If you're looking at trying to enter a short position and you know that this overall direction is to the downside, then what you want to do is go to lines, go to add Fibonacci retracements, and then go to freehand. And then how you use this levels is you have to take it from a high point first. So if you're trying to locate to enter a trade short and the overall trend is to the downside, you need to look to take the first point of the retracement from a significant high. And what I mean a significant high is a place where the price made a high or a peak, and then following that there was a retracement to the downside. So we can clearly see here this was a significant high point in price. So what I'm going to do is I'm going to take the first point from a high. Okay, so I'm going to take the first point from a high, and then I'm going to drag it all the way down to a significant low point, or significant low point where the market found a bottom and then retraced. The Fibonacci retracement levels that's intact, that's used for many years, you have the 23.6%, 38.2, 50.0, 61.8. Okay, those are the specific levels. So I'm going to now click on OK. Then what you then have is I've taken a retracement from a high point to a low point. So let's say, for example, you've missed the move to the downside. You're now looking at entering a potential trade short, but you want the price to retrace up to a resistance level or one of your retracement levels. So what I've done is I've taken from the high point to the low point, and then I'm waiting for the price to potentially retrace, push up to the upside, hold at one of my levels before I look at entering a trade short. So what we saw is price found the 23.6%, which was roughly the 13061 on the euro dollar, held a nice resistance, spiked up, did not close at this level, it closed lower down, but this provided an opportunity for us to enter a trade to the downside. Now using our advanced strategy, I will show you later on how we enter this trade. But it found a nice resistance here, and then it then sold off from the highs of about 13064, and it bottomed out at 12944. Okay, so we saw a nice strong move of more than 50 pips to the downside. So I hope you enjoy this, and I'll see you on the next module.